And now BlackRock's Larry Fink weighing in, saying a 4% 10-year yield would lead to, quote, downward drafting in equities. Sean Darby, I'm sure 4% would be a lot more brutal than 3.
Yes, it would be. I mean, a lot of it depends upon where real interest rates are. So if we get to sort of +1, 1.5 on the US Treasuries, I think that's really tough for equities. And again, about 65% of the S&P companies have free cash flow yields of about 5.5%. They can live with 3, can live with 3.5. 4% would be really, really tough.
Your base case for a 10-year yield, I'm trying to work out how we get to 4% in this cycle. What gets us to 4%?
It was two things. It's continued Fed tightening, pushing up the front end, and then it's getting some term premium back in the curve with all the supply weighing on the long end of the curve. Now, 4 gets a little bit tough to get to, just because the U.S. economy can handle 4% yields. The global economy can't. And then we get this disconnect where if you get softening in the global economy, U.S. yields look so cheap relative to everything else that we get huge foreign demand into the U.S. So 4, I think, is a little bit tough anytime soon. But, you know, we can move. We think we can get, 375 by the end of the year.
How expensive downside protection in the equity market at the moment, Mandy?
So the interesting thing is that, post the February spike in vol, we really haven't seen much hedging in the market at all. So if you look at, a measure that we look at called skew, which measures demand for puts in the equity market versus calls, that's in the bottom decile in the S&P. Whether you're looking out 1 month, 3 month, or 6 month, that's very unusual because going into January and February of this year, especially longer term skew was actually very elevated. So we're seeing a pretty dramatic shift, I think, in investor sentiment in the equity market to be more constructive.
Does that present an opportunity?
Absolutely. I think, with vols coming in and, if you're looking to add exposure, I would, recommend buying calls outright, call spreads in the market as a way to lever your upside exposure to the market given how cheap volatility is currently.